to have a look at those and to check out those numbers. In the meantime, political reporter Tom Crowley is also with us from Melbourne. Tom, just how are political circles anticipating today's figures?
Well, these numbers, Dan, are always watched very carefully in Canberra. If it is a steady number, as we're about to find out in a moment, it's not going to change too much in terms of the picture for the federal government. They know that the Reserve Bank is watching and waiting, wanting to see some signs of that heat that David was just talking about in the labour market easing a little bit before they're willing to contemplate the rate cut that the government is hanging its fortunes and hanging its hopes on ahead of the next federal elections. So that's what the government will probably want to see. They don't want to see a higher unemployment rate, certainly, but if they do see some of those signs of easing or steadiness, maybe they will think that will get the RBA a little bit closer to that rate cut before the May deadline for the next federal election. That's how they'll be viewed here.
Tom, stay with us. I want to bring back in our business reporter, David Chow. David, you've just had a look at the numbers. What can you tell us?
Well, Dan, as expected, the unemployment rate was indeed steady at 4.1%, which is still a very low number by historical standards. And the employment level, the number of new jobs created in last month, up 16,000 people. So that's less than the 25,000 new jobs that economists were expecting. So that's one area where we see the jobs market slowing down, fewer jobs being created than previously expected. Now, the ABS says this was the third month in a row that the unemployment rate has been at 4.1%, and it's still about 0.6 of a percentage point above its recent low of 3.5%. So I did take a look back at the past 2 years or 3 years worth of figures, and the unemployment rate has really been between 3.5% to 4.2% over a 2-year period. So that's a really long stretch of the jobs market being very strong, and the unemployment rate is still a fair way lower than where it was pre-COVID. So back before March 2020, it was sitting at 5.2%. So the jobs market now is stronger than it was before the pandemic even happened, remarkably. So the number of unemployed people, the ABS goes to say, last month was 67,000 higher than a year ago, but still 82,000 people lower than pre-COVID days. And while population growth in October outpaced the small rise in unemployment, now the participation rate, that's an important one, that fell slightly to 67.1%. So the participation rate is the number of people who are currently in work or actively looking for work. So that's dropped slightly from 67.1%, but still pretty close to a record high. And I guess one reason why the participation rate has been so high lately, possibly because of cost of living pressures, more people facing pressure to, go out and find work, the dual income in a family being more important than ever to stay on top of grocery bills. Now, for a more detailed breakdown on these figures, let's bring in Sherelle Murphy, the chief economist from EY. Morning, Sherelle. Anything surprise you in these latest job figures?
Good morning. No, not at all. They were exactly as expected, at least in terms of the unemployment rates staying there at 4.1%. The number of jobs created in the month was a little bit lower than the market had expected, but certainly not substantially so. So, of course, this follows what was a very strong rise in employment last month. And so there is, you couldn't say anything other than the employment market continues to be fairly strong and employment conditions fairly tight.
Well, it's quite incredible. Lots of businesses still hiring, a lot of people still finding jobs, despite the economic pressures of higher interest rates, cost of living pressures and a slower economic growth. So how long do you think the jobs market can remain this strong?
Yes, it certainly has been surprising because, of course, GDP growth has slowed, but the employment market has remained quite strong. I guess one of the differences here is that a lot of the growth that we've seen in the employment market has been in the so-called non-market services, so things like health and education, and also in general government services. So these don't necessarily contribute a lot to GDP, but of course they're really important jobs in the economy. And of course for the households who have these jobs, of course, it supports their income. So, look, we don't necessarily expect anything to sort of move too quickly on this front. The Reserve Bank is, of course, trying to engineer a soft landing in the economy, and for the most part, that's what we're seeing. So we do have a relatively good jobs market at the same time that we've got inflation coming down. Now, unfortunately, it's not coming down quite as quickly as the Reserve Bank would like, but I think we can expect those inflation numbers to get a little bit better. Hopefully, the unemployment rate to stay relatively low around about these levels, and that will eventually, of course, lead to a situation where the Reserve Bank might be able to cut the interest rate a little bit and give us some relief there too.
So, Sherelle, how do you think the Reserve Bank will react to these job figures, and when do you think they're likely to start cutting rates?
I think the Reserve Bank won't be very surprised by these. It will be very much in line with its forecast. It is, however, expecting the unemployment rate to creep up a little bit towards the end of the year to 4.3%. So at the moment, it's not out of line with that forecast, but it does suggest that the labour market won't grow jobs quite as quickly as it has been. Now, if that all continues to fall into place, and of course, importantly, inflation comes down, then I think the Reserve Bank can start cutting interest rates into the first quarter or the second quarter of next year. But so much does depend on that price behaviour. And of course, in the last few weeks, we've had huge interruptions to the global economic scene with the election of the Trump government. And I know that the Reserve Bank is really keen to see how that evolves into the first part of next year when President-elect Trump takes office. So there's a lot going on. The Reserve Bank is taking it easy. They're taking their time. And I think that will continue.
Yeah, sure. I'd like to talk to you about these international factors. So on the timing of rate cuts in Australia, how much of an influence do you think Donald Trump, the incoming US president, and his policies will have either directly or indirectly on the RBA's decision to cut rates?
I think over the next 6 months or so, it's not going to have much impact at all. And that's really just because we don't know exactly what the president-elect is going to do. Now, of course, he has suggested that he will put on quite extensive tariffs around the world, and these are inflationary for the US economy. They do close down trade across the global economy, and that can be inflationary. It's something that kind of contracts the supply side of the economy, if you like. So that could have unfortunate inflationary consequences next year. But there's also a lot of other things going on. The fact that, for example, there's tax cuts in the offing there, and that might actually generate more activity. It might cause a pickup in business sentiment. We've seen equity prices respond to that accordingly. And these can be positive for growth. So there are a lot of dynamics going on. And I think really over the next 6 months, it'll take some time for these to settle down and for them to be clear as to what they mean for the macroeconomy. But certainly towards the end of next year and the year after that, we'll start to see whether the policies are enacted and then what impact that they have on the US economy and ours.
And one last thing, Sherelle, I had a quick look at the Reserve Bank's latest forecasts, and they're expecting unemployment to rise to 4.5% by the end of next year, which is still a very low number. So, you know, given it's still expected to be a strong labour market for a while, how easy do you think it is going to be for people to, well, ask for pay rises or switch to another job if they're not happy with their current one?
Well, for the most part, the labour market is still pushing up a lot of opportunities for people. It's not as strong as it was back at the end of 2022 and the beginning of 23, but certainly job ads are still at an elevated level, certainly higher than they were prior to the pandemic. There is still a little bit of job movement going on, certainly out there, and you can see that, of course, in the fact that employment growth has been quite strong over the last 2 months. As I said, some sectors are hiring quite enthusiastically, including in that healthcare, aged care, education, government services. These sectors are moving along quite quickly. And of course, there's lots of demand for labour in sectors like construction, where we're really struggling to get enough workers to build the homes and indeed the infrastructure that we need. So really strong pockets in lots of the economy, others not quite so strong, but I certainly wouldn't say that for the most part people have any trouble in finding a new role or potentially switching when they see a better opportunity. Just not quite as strong as it was at the peak though.
All right, but still reasonably strong. Sherelle, thanks so much for breaking it down for us so simply.
My pleasure.
Now, let's take a look at currency markets to see how they reacted to the latest job figures. And it was pretty much unchanged. So the Aussie dollar is still buying 64.9 US cents because these results, a 4.1% unemployment rate, was still within the market's expectations, or bang on, in fact. Now, taking a look at the share market, we can see that the ASX 200 and All Ords, in percentage terms, they're still up by 0.5%. So they didn't even bat an eyelash. So it seems that, judging from the market reaction of the Aussie dollar and the Aussie share market, this was pretty much exactly what investors expected. And Dan, that's the latest in finance and those job figures.
Yeah, appreciate you going through that. David, I want to bring back in our political reporter, Tom Crowley. Tom, having heard now some of this detail from these job figures, what do you expect the political implications to be?
Well, steady, 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 Dan. So the political picture, once again, is unchanged. We're still in this holding pattern. We can expect that the government will celebrate that once again, in net terms, jobs have been created. And of course, they will celebrate that. Last month with the unemployment figures, we learnt that job creation, as the government is now very fond of reminding us, has passed 1 million jobs created on their watch. That's something, of course, that any government will celebrate, just as they celebrated yesterday when, for the fourth quarter in a row, wages grew faster than inflation. Those things are good news for any government, particularly for a Labor government, but there will be a nagging feeling because they know that the thing that really matters most of all to voters is inflation, and by extension, the interest rate. It's what we saw in the US, that a really good result for unemployment, real wages growth, they weren't enough to save the Democrats, the Biden administration. Voters still punished them because they were fixated really on that inflation figure. And that's where the rate cut and when that's going to come remains the all-important question for the government. And that's why, as much as they will continue to celebrate job creation, they know the Reserve Bank has been very clear that this residual heat in the labour market, this continued job growth, is something that's concerning them. They're not sure whether that is consistent with banishing inflation, and that's why, at least for the rest of this year, we're not expecting a rate cut. It's also why we're not sure whether we'll get a rate cut at the first meeting of the new year in February. The RBA, we'll see in this number that the jobs growth rate was slightly lower than what it's been in the last few months, so maybe that is some of what it wants to see, but it's been pretty clear that it's watching for a continued easing before it's ready to consider moving its monetary policy stance. And that's really what will occupy the minds of federal politicians.
And Tom, you will have seen there's already been breathless speculation about when the election will be held. What sort of impact does the shape of the economy have on that timing?
Breathless is right, Dan. It's the favourite parlour game among anyone who's watching federal politics. And I think really it's mostly guesswork at the moment. But we know that it has to be before May. We know, of course, that the government would like to have a rate cut before the next election. But equally, if they think they're not going to get one, then maybe some other considerations come into play. So there's some talk around Canberra circles that this upcoming sitting week that takes us to the end of November and is the last for the calendar year might well be the last before the next federal election. That could be consistent with an election call perhaps in late January or early February to then have the election in mid-March. That would see perhaps the all-important Reserve Bank meeting happen in the middle of February, and perhaps it could see a rate cut in the middle of the election campaign. If it doesn't happen, Labor might make the judgment, well, if it's not going to happen in February, it's unlikely that it's going to happen in much time to give us too much help heading to the polls. So it's not clear yet whether the timing of the Reserve Bank meeting will be the determining factor in when Anthony Albanese decides to send us back to the polls, but it's pretty clear that it's front of mind because the economic story is going to be such an important part of how both major parties frame the conversation to voters ahead of this all-important election.
Well, you must keep us up to date on all of that speculation there. Tom Crowley reporting from Melbourne.